welcome to KTEK Aerosystems webinar. I'm David Tasker and I'll be your host for today's session. Joining us are KTEK Managing Director and Founder, Dekel Keiser, who will lead today's presentation and be joined by Chairman Howard Digby, who is also on hand, as I said, to participate in the presentation and the discussion that will follow. Today's presentation will provide an update on KTEK's operations and review the company's results and activities for the quarter ended 30th of June 2026. The presentation is based on information previously released by KTEK to the ASX and does not contain any new material information. Following Dekel's presentation, we will move to a live question and answer session where both Dekel and Howard will be on hand. For those joining us on Zoom, questions can be submitted through the Q&A function at any time, and we will aim to address as many of those questions as possible through the Q&A session, but we may group some together where it's obvious they are together. Before we begin, I remind everyone that today's presentation may include forward-looking statements. These statements are subject to risks and uncertainties, and actual outcomes may differ materially from those expressed or implied. Investors should refer to KTEK's ASX announcements for the complete disclosures and relevant qualifications. I'd now like to hand over to Dekel and Howard. Guys, over to you.
Well, welcome everybody. I'll hand over to Dekel to do the presentation.
Hello everyone, and thank you for joining us for the first presentation that we are doing. I want to talk about the business on the results that we got in the last quarter. First, I will update. We'll start, I think, from the first thing is, as you know, we have few big clients that were waiting for our deliveries, and we had some disruption in the last, within the first 6 months of this year. Everyone knows that, and that's what we were reporting in the last announcements. So we are now currently doing all the recovery and ramp up, and we have some delays in our plan. Good for us is we didn't lose any customer. All the customers are waiting for us, and currently we are going to deliver around September. All the things that we plan to deliver. So as I said, the market is still the same market that we have. We have the same model, and actually I just came back from one of the biggest customer we have in the US, and he's waiting for us, and we are going to start again on September. So can you move to the next slide, David? So I just came from the US, as I said. I came with our new site manager. We had meetings there. We had meetings with the client. We were collaborating and having our plans for the collaboration for the next year. And can you go on, David? So as I said, the demand stayed as it was. As before, we have the same customer, we have the same order book as before, and we are just now expecting to deliver. Can you move? Okay. So what we did in the last few months, even though we had the disruption, we actually used the time to prepare ourselves to the next half of the year, because we need to, as I said, the demand is there, and we have to deliver actually the same amount that we wanted to deliver during the year. We need now to deliver it in a shorter time. So we use this period of time to prepare ourselves to meet those deliveries and those demands. What means is we had as you know, probably we had now delays with the license. We expected to get the license by the beginning of June, the license to deliver from Europe to Israel, and we didn't get it yet. We expect to get it soon. Currently, the date is September. We are talking to the authorities there. They had some questions. Most of the questions are technical, and we thought the process will be much shorter and will take much less time, but apparently they had some questions, and we got to this point. So we prepare ourselves to have much little time to deliver the same quantities that we had before. A few things we did something that we did in order to meet the demand is, first of all, we have a license now. We have an application for a license to deliver directly from Europe to the US. It means we had a plan to build the site in the US, but we expedited it. Because of the situation, we expedite the establishing of this facility. That's why I was in the US last week. We plan to do it by the end of the year, but currently we will do it. We will start delivering there once we get the license, which will be around September, and we will try to get it working as soon as possible. That's one thing. The other thing we did is we went and actually produced more tools to be able to have more suppliers, get redundancy. And one of them is in Israel, that is now being in the process of qualification. Another one is also in Europe, which I was meeting last week also. So the plan currently is to start ramping up deliveries by September and to deliver as much as we can by December. As I said before, the demand was not there was no change in demand, and so everything we don't deliver in 26 is going to 27. Hopefully, as less as possible will go to 27. Can you move to the next one, David? Okay, so first question I think everyone will ask is about the quarterly of how much cash do we actually have and how many quarters we have to operate. So I'll explain that this quarterly, this is the first one. It includes a lot of one-offs, which related to the IPO and many other things. The actual quarters that we have is more than 5 quarters that can from the cash that we already have. The burn rate is far from 2 million. It's about 0.8 to 1 million per quarter. That's why we say it's not it's kind of misleading to say 2 quarters. So the actual run rate we have is about 5 plus. That is without any revenue. That we don't expect to have no revenue. We expect to have by September. We expect to start having revenue like planned in June. So I think that is in 5 minutes in a glance what we did in the last quarter. One important thing is we use the time also. I think it's been said before during the IPO and the roadshow that we are onboarding new customers. We are actually moving forward with this process. We have 2 primes that currently within the process. One of them is kind of mature, much like mature, and we're expecting it to be mature in the last quarter. And the other one is we are going through audits with him, and also in a short time, I think we will be qualified. And those are really big changes for us.
Thank you, Dekel. If I may summarize before we go to questions, essentially we have a supply constrained but not a demand constrained business. This company can sell as much as it makes. Dekel's outlined that our major customers have multi-year contracts, and their problem is supply. So there's also, and then we're qualifying new customers, as Dekel has just outlined, or new programs within those customers. So an amazing business that's not demand constrained. Every business you invest in is trying to sell more. We have, an open opportunity here. The cash situation that Dekel has explained, it speaks for itself. We can answer questions about that. And on the issues to do with supply, now we've outlined 3 different parallel paths to unblock that. If all 3 happen, happy days. If only one of those pathways open up, we already display and demonstrate our investment thesis, which we believe is a very strong one. So watch for our updates on that, and of course we'll discuss this more in the Q&A.
Thanks, Howard. We may now move into the Q&A. A few questions while you've been presenting have come through, so we'll jump into those. But I would remind people that where a question seeks commercially sensitive information, customer confidential information, or information that has not previously been disclosed, Dekel and Howard may not be able to provide a detailed response. But against that backdrop, let's get into it. Now, obviously, the cash position, I just want to reiterate that because some questions have come through. KTEK raised $10 million through its IPO, ended the quarter with $4.625 million in cash. How was the IPO funding used, and what happened to the cash KTEK held before the IPO, particularly when you look at it against the 4C?
Dekel, I think that's for you.
We need to repeat that because I had disconnection. Sorry.
So I'm just talking about the cash position post the sort of end of quarter, what the quarterly showed. I know you touched on it in your presentation. A few questions here about it. In terms of how much cash does the business have at its disposal, and what is the runway that cash gives you?
Okay. Currently, the business has 4.6 net cash, 4.6 million. The runway is a bit more of 5 quarters with no revenue, okay, which we don't expect to have no revenue, okay. Some of that it is because we have some cash in collaterals in deposit, actually. It's also kind of misleading, I think, because it's in a daily deposit, and we chose to do it because of the US dollar rate. We get the money comes here to Israel bank account in US dollars. On May, when we finished the IPO and got the money, the rate was 2.8 shekels per US dollars. Currently, it's 3.05. I chose not to cash it. Okay, to take a loan and not to cash it, because we gained 300,000 shekels only until now, and I think we will gain much more. But anyway, it's cash that we can use, and it's in daily deposit. We can use it every day once we want it.
And that's the question here. That's the $2.237 million that is sitting under investing activities within the 4C.
Yeah, exactly. Other than that, it just, we have 5 quarters. As I said, that's with no revenue. That's the worst scenario that can happen, and which we don't expect.
Howard, if you'd like to add anything?
The other part of the question was, what happened to the cash raised before the IPO? So the cash raised before the IPO, apart from transaction costs, were used to unlock significant capacity. Dekel and his team tripled capacity. Now, of course, we know that they've come across some various blocks there, but the actual capacity has tripled. And the idea about that was to hit the ground running at the time of the IPO, build that business momentum.
Yep.
And we actually, I want to add to that. Okay, we actually, like, our marketing way is we come to a customer and we like KTEK is, as I said, our biggest advantage is we know how to develop the product itself. Okay, we came from companies like the customers. Okay, we know their products sometimes more than them. And what we actually do is we find a component with a big prime. Okay, we are looking for big projects. We choose our customers. Okay, we have the opportunity to choose which customer that we want. Once we choose a customer, we are looking for a component that we can improve or develop if it's completely new, or to improve it, and we actually hand it to the development and hand it to the customer. In that way, we have less resistance, let's say. Okay, so the marketing is actually also cash consuming, but it means that we give something else to the customer, and that's how we got, even though we were a very tiny company like last year, and we got a customer like we have now. That was the way we did it. And actually, currently we are doing that with other customers. Okay, and that's why we are expecting the result in 27.
So can I just touch on that? There's a few questions here in regards to customers, and I won't name them specifically, but can these big customers source their components elsewhere if the exports or aerospace issues or there continues to be disruption? How embedded are you in their business?
Actually, that's an excellent question. Theoretically, they can. Okay, but it will take them a long time. Okay, it takes a supplier like us, it takes for a customer to develop a supply, it will take like about 2 years. Okay, if he's already qualified in a certain level. Okay, the product that we are delivering are complicated product. As I said, we choose the customers and we choose the product that we supply. We choose it in a way that it's hard to replace us. Okay, and as I said, I came back from the US from a customer that, we have disruption in delivering for the last few months. Okay, we had a good discussion there. He's like, we are going, and we talked about which parts are more urgent to him, how we can help him, and he's waiting for us. He's actually waiting for us to deliver, and he needs the product, and we will do our best to deliver it as soon as possible.
Just touching on that, and how you touched on it just before we started the Q&A. Again, there's some questions here around contingency and planning across multiple paths. Can you just talk a little bit to the contingency steps being put in place and the paths you're opening up so that you're not reliant or over-reliant on any one path?
Okay, first of all, we applied for a license directly from Europe to the US, which should be much different than delivering to Israel, a license to Israel. Okay, we applied and we are waiting for this license. Once we will get it, we can deliver our product directly to the US and deliver it to the customer from the US. That's one thing, and that will cover, I think, the US customer. Other thing that we did is we are developing a production line here in Israel. We already started that with the pre-IPO money, And we are currently, we expect to have the first FAI product. FAI is first article inspection. It means that first parts that will be produced by September. And as I said, those are complicated parts, complicated products. It takes time to qualify manufacturer, but we have the process. That's why we can do it in 9 months, 6 to 9 months with the completely new manufacturer. Other things that we did is we are working to qualify suppliers, other suppliers in Europe and in the US. These processes are currently premature. Okay, we are not in the stage now that I can say exactly when they will be operated. In order to do that, we order the manufacturers more tools. It's not only tools to have the 150 sets. Once you have more manufacturing lines, you need tools for everyone. So of course, we won't send everyone tools for 150 units because sets per month, because we will be out of money. But we have to give them tools for at least 20 sets per month, and the sum of all of them will give us the redundancy that we need. Okay, if we don't get it with one supplier, we'll get it from the other. Also, it took us time to get the customer blessing because we are completely transparent with the customer, and it took us time. Like only on April they gave us the blessing to actually operate the lines with the production lines with different suppliers. And I have to say the discussion with the customers is not like, where is the part? Okay, it goes like, how they can help us with the process, with the delivery, with the license, because everyone knows, it's a win-win situation for everyone. They want us to deliver so they can deliver. Okay, of course. Okay, it's not that they are looking for the other way or looking to other suppliers. Okay, we are working together to fix this disruption.
Is that what's giving you the confidence that the September timeline that you've referenced and the company's referenced in the 4C is achievable?
Yeah, that's one of the things that give me the confidence. Yeah, for sure.
And just for the benefit, there is a question coming in for those who know the business, the cordless factory model. How does that model, firstly, explain it a little bit for those who don't know it completely, but how does that support that operating leverage that you've just talked about?
So the cordless factory means that we actually have production line within existing factory. So we don't pay for the rent, we don't pay for employees, we pay for what we produce. In a period like the last 6 months, it's very good for us as a company because we could not deliver because it was a geopolitical situation that like the disruption was out of our hand. We could not do anything. If we had to pay for the factories and the employees and the buildings and the loans and stuff, it could be a very bad situation for the company. So that's one of the benefits. In these times, we just shrink to the core and waiting for the situation to go. On the other hand, it allows us to ramp up, because if we were relying on our own facility, I think it's very hard for a factory to ramp up in a rate that more than 15%, 20% per year. I think it's really, really hard from the companies, from my experience. For us, it's not easy, but it's much easier because you go and qualify manufacturing. It's much shorter process and much less cash consuming process, especially once you have the process established.
You previously referred to an approximate, and it's in the presentation, a $6 million Aussie contracted order book. How much of that book remains in place, and how should investors think about its conversion into revenue?
Everything is in place, and we will convert everything for revenue.
And what about new customers? There's a question here or a comment that investors want to see KTEK reduce its dependence on its current major customers. What progress is being made on customer and revenue diversification?
I would want to see KTEK also reduce reliance on the customers that we have now. That's why we are qualified. We are in the process of being qualified for another 2 very big primes in Israel. It's a process started after the pre-IPO. It's a long process. You should have in mind a company like Boeing or Airbus qualification. Okay, so it's a long process, but once we will be over this process, that means that we will be qualified and we can start getting orders from those companies, which will be a very, very major milestone for us.
Question here about the US operations. What progress has been made towards establishing proposed operations in the US, and why is that site so strategically important?
It is important because we need to deliver the US from the US. And we want to be close to the customers. One of the things that we do is we stay close to the customer because communication is very, very, very important. We don't guess what the customer wants or needs. We visit it. We have our people go there. If you compare it to someone that manufactures in India, let's say, okay, he's there and he's sending products. I would try to ship if I could, every batch with someone shipping it in, going there with the batch and opening the boxes with the customer. Because I believe that will, the communication is very good. It's very, very important. That's one thing. The other thing is, it is very important because we actually want a footprint in the US. We know the market is huge. And once we will be there, and we already have a customer there, so once we will be there, and other companies under potential customers will see us there. They will see how we work. They will see us deliver. I'm sure that we'll have more business there. We started communication with some potential customers there. It is, it's just communication currently. But I think once we'll have an operating site there that we can invite people to see, it will accelerate. So I think it's a very important thing for KTEK.
The question here about the size of the site in the US. Maybe can you share a view on why it doesn't need to be a significantly large site to deliver returns for the company?
Okay, that's also an excellent question. The reason that we have a cordless factory is, another reason is cost. Okay, we manufacture in low labor cost countries, and let's say the thing that we manufacture in Europe, it consumes about 2,500 square meters, okay, and around 30 to 50 employees, depend on the time. In here, we assemble it in Israel with 2.5 technicians in less than 100 meters and less than 100 square meter room. Okay, so in the US we got 200 and something square meters. It's offices and assembly site I don't believe in just go and pay for rent for huge buildings and stuff. I think we should be focusing on delivering and getting cash in. So we are starting with assembly, with what we need here. We know it works because we already duplicated to the Netherlands, and what we are doing in the US, we are going to duplicate it to the US. It will work. Once it will generate revenue, then we will consider do other activities there that we don't do currently.
Question here, I know you touched on it briefly before, but a question here in regards to the Netherlands export license. How long do you expect the renewal process to take, and does the length of the process indicate a risk that the license may not be renewed? And if it isn't, and even if it is, what contingency plans are being progressed?
First of all, it's a government office, okay? Government officials. I cannot say the timeline, okay? They say that they are obligated for 8 weeks, but 8 weeks is every time they ask a question, they have 8 weeks more, okay? Once we answer. So I was expecting to get an answer much sooner. Unfortunately, we didn't. We didn't get the answer yet. I assume the answer will be positive. I cannot, nobody can be assured that, but I assume that the answer will be positive, at least for one of the license. I don't see any reason not to get the license to the US. And actually, I don't see a reason why we won't get the license to Israel, because the last license we got was during the war. During the worst time for Israel public relations, we got a license, and the license says missile guidance equipment. Okay, that's the headline of the license. Okay, so I'm aware, and it's frustrating that the process takes so long. It's very frustrating for us also. But if there is a logic in the process, I think that we will get the license. Assume that we get the license. Anyway, we also plan for a production line in Israel, like I said, and if needed, in a different place also.
A question here in regard to customer interest. You obviously talked about a range of countries. Have you received and are you receiving much interest from Israeli companies in the drone space?
Yes, we are. We are receiving a lot of interest from Israeli companies. As I said, we are choosing the customers and we are focusing on delivering. Okay, and we can be qualified for few customers at the time. We are now in the qualification for 2 primes. That time and resources and cash consuming. We will go through the audit, complete the audit with one. We'll go through the audit, and then we can onboard the other one. We can have 2 at the time, I think. And I think we are doing it. We are doing the process well currently. Actually, we had onboarded another client already. It's in much smaller scale than we have now, than the big client that we have. Okay, smaller scale. I mean the project that we are doing now, which is much smaller scale. That's why we don't, announcing that and stuff. But we expect to get a much bigger scale order from this one in the next months because we are increasing the work share that we do for him step by step. We started just from assembly labor, and now we are going to build to spec that is step by step with this customer.
Howard, question for you. From the board's perspective, or for you, sorry, what are the most important priorities for KTEK over the next 3 months?
The first, I mean, as we've discussed and spent a lot of time today, the first biggest priority is, of course, resuming supply and executing on our plan. I mean, one of the reasons I even agreed to get involved is looking at the way Dekel runs his business, the way he knows everything that affects, he knows the handles to turn to achieve results in his business. So we have a very tight plan. It's about executing on that plan, and it's about unlocking supply to start with. Secondly, it's about picking those targets that are the low-hanging fruit. We have no shortage of these opportunities, as Dekel is saying, and we're ready. It doesn't hurt to be qualified in those customers. But these are very large customers, and then within those pieces, there are multiple pieces. And the third priority is to make sure that we communicate with the market. People understand our value proposition. We're a listed company. You know, this is not my first rodeo. Some of you know me from Elsight, for example. I see tremendous potential in KTEK. What, you know, the way the deal was priced, the IPO was priced, the good work that CPS did in putting this together. I want to see that potential. So from a board point of view, I'm not just working in the company, working on the company, and in the vein of on the company, it's in communicating to the market. So they're the main things that I'm focused on. As I say, I've very rarely been involved in such a demand-constrained business. A little story: when Dekel and I were talking to companies in the US, investigating our expansion in the US, two of the big groups we spoke to were actually contract manufacturers. Now, we won't necessarily use them to do something for us, but we wanted to see what facilities they could help us get hold of, right? And then when we had those meetings, they stacked their meetings with all their people. And they realized that they're interested in helping us, but they're more interested in us helping them. Such is the dynamics of this market. Now, tell me one industry that you know of where suddenly China has been removed from the entire equation. There's been nothing like it, but that's the case with drones and defense. And that's the situation we're playing in. People are desperate to get hold of the capability that we have, that Dekel and his team have, which was demonstrable in those encounters that we had. So we're not going to get ahead of ourselves. We're very planned and focused on the low-hanging fruit, but we do want to capture this incredible opportunity.
And Howard, just touching on a point that was made right at the beginning, in terms of the 4C, the numbers are the numbers, and they represent it in a very formulaic way. How important is it for people to understand what the numbers really mean?
Well, as defined by the actual questions, it's clearly very important. I mean, if you look at the formula that shows what looks like a scary number from an arbitrary formula, that has to be positioned. So I hope that having this webinar today, and I hope that the information contained in the 4C and the accompanying activity report has been able to clarify that. And I think that what investors need to look for, they'll be judging us, and so they should be looking for the catalyst ahead, such as the opening up of supply and the ramping up of revenue as a result.
Dekel, we are pretty much out of time and out of questions. There are a couple, but I think we have actually touched on them already. To finish, why should investors be paying attention to KTEK at this point in its development?
I think we are in an exciting time. We are now just, before a big breakthrough. We have disruption in deliveries. That's correct. Once it opens back, we'll solve those problems. We will be delivering, and we'll be delivering much more than before. We have new customers that are waiting for us. We are doing qualification. We have lots of plans on the way, and I think those next 2 years will be very exciting for us.
That does bring us to the close of the Q&A. Dekel, Howard, thank you for your time.
Thank you.
Thank you, everybody, for joining us.
As I said, that does bring us to the end of today's webinar. Thank you to Dekel for leading the presentation, and to Howard for joining the discussion and responding to shareholder questions. Thank you also to everyone who attended and submitted questions. We received a strong number of questions and have attempted to get through absolutely as many as we could. And where we've had themes, I've brought them together. So if your question wasn't asked, I have tried to join it to others to save a bit of time. A recording of today's session will be made available following the webinar and will be sent to you directly and will be posted through the company's various channels. KTEK will continue to update shareholders through announcements lodged with the ASX as material developments occur. As Dekel's mentioned, there's a lot to be seen and followed from the company over the coming months, and we do look forward to following with interest, and for you as shareholders or interested parties to continue to follow the company with interest. So thanks everybody for your time, and have a great afternoon or evening, depending on